And we're live. Good morning. My name's Tim. This is Matt. For many of you guys who don't know, who haven't joined us on some of these live streams, we're actually brothers. We chose not to put Matt Johnson and Tim Johnson down there. We just shortened that right up. But we run a local real estate team here in Phoenix, Arizona, called the D1 Agent Group. We specialize in helping our clients set up tax efficient real estate portfolios. So we saw a gap kind of in the market. Where we saw a lot of our clients when we would help them buy investment properties and then follow up with them to kind of qualify for the next investment property and things like that, where their CPAs were just dropping the ball. We had clients who bought 2, 3, 4 rental properties with us, and we would find out that their CPA, had failed to file the taxes on the rental properties. And we saw you should never have to remind your CPA to one, just file correctly, but two, to be able to really put a plan in place to help optimize the things that are going on in your life. So whether that's in your business or in real estate, on the income side, they should have a way to optimize that. And so, we've talked and worked with a lot of different CPAs across the board, and we've seen a lot of CPAs who just are not educated well on the real estate side. And so we wanted to really help our clients kind of bridge that gap. And so we work on the real estate agent side. We help advise on the real estate side. We build out real estate plans and be strategic around that for our clients. But then we kind of bring that tax knowledge a little bit to the table, and we can help really, help them be tax savvy when they approach their real estate portfolio and when they're building that wealth on that side. Where we can get, really creative, and we partner with the CPAs that we work with, or we'll refer them to somebody that we know. But at the very least, we just wanted to make sure that our clients were getting served and taken care of at a high level. Yeah. So today we're going to be talking about kind of the benefits of deferring your tax obligation, right? So we want to always be thinking, hey, how can I build tax-free wealth with real estate, right? So how can we maximize our real estate investments and defer my tax bill? Because you can have both of those things, right? And so in a post earlier this week on LinkedIn, I said, cash flow is king, right? And deferring your tax bill is queen. The tax benefits of real estate is queen, right? And when you can marry that combo together, you have a strategy, you have a way to build tax-free wealth at a high level. And so we wanted to talk about mainly the bigger concept of why deferring your tax bill is powerful, because there really are two camps of people when you talk about this specific topic. And we'll talk about that today, but there are two camps of people that really believe, hey, you shouldn't do that, or they're fearful and they don't know how, and it feels like this big monstrous thing. And then there's that other group of people who are saying, hey, no, once you have a plan in place, you can do this effectively. It's all good. You're not cheating the system. The IRS is set up to help you thrive and succeed in that way. You just need to know the rules in the game. And so we're going to just kind of be talking about high level concept of why we believe, especially from the perspective of the real estate side and building wealth through real estate, why it's really important to be maximizing the tax benefits of your real estate portfolio.
Right. So let's talk a little bit about that camp one you talked about, the person who's kind of scared of using the tools available to them on the tax side. If you own a rental property and you're using a CPA that understands how to file for these, most do. It's pretty basic. They're going to be filling out a Schedule E of all of your expenses and all of your income for that rental property. And that is a normal portion of that. Part of that is depreciation. We've talked in posts and videos in the past about what depreciation looks like and how powerful that can be as a tool. So that's like the basic. And at the very least, that should be taking place. You should be running your rental property on the up and up and paying the taxes that are due and not paying the taxes that aren't due yet.
And like I mentioned, that seems like a very baseline thing, right? Yeah. But we've seen it not get taken care of.
Yeah.
And so you'd be surprised. And it comes down to really just making sure your CPA is aware that you own rental properties and making sure. So the street of communication is both ways, huge. Right? But if your CPA is not even, willing to ask you the right questions, kind of dig out that information every year, you don't really have someone in your corner who's doing their job well. You're just having somebody file your tax obligation for you. There's no strategy, there's no planning behind it.
All right.
So yeah, that camp number one is these people are typically scared. They just don't know about some of the blowback that they might encounter when they take depreciation with their properties. They're scared that hey, what if I accelerate that depreciation with a cost segregation study? I'm worried about recapture, and I'm worried about some of these other things down the line. What happens when I sell the property? If I'm taking that depreciation, I'm gonna have to pay it back, and I'm worried about capital gains. And and I would say that the people in camp one are right. Like I don't want to discredit that fear, because it is a fear. And if you don't have a plan in place, this is where it is. If you don't have a plan in place, then you should be scared. If you have zero idea on what you're doing on the tax side, you've given it zero thought, you're just buying out rental properties, you're renting them out. You're not even sure if you're filing them correctly with your tax preparer, and you have zero plan around how you're strategically buying and selling properties, utilizing the depreciation to offset tax liability. Then you are, I would say, if we were to just throw a number scale at this in terms of like sophistication around your investments, you're at a 1. And you're really just flying by the seat of your pants, and you are missing out on the main benefit to real estate. And I think that's what we've really come to the conclusion of the longer we've been in real estate. Cash flow is king, right? It's always going to be the first thing you do when you underwrite a property. You got to make sure that it hits your numbers. But that's where, I don't know, 85% of people stop, and they don't run all the other scenarios of the benefits that real estate brings to the table, right? And it's specific to you. It's like, hey, what is my tax burden going to be this year? How much is a business spitting off? What business am I working in? Does that offer me specific benefits in the way I'm kind of working with my real estate portfolio? And so when you can take all of these things into and put them into a cohesive strategy that's specific to you, you're going to utilize all the benefits of real estate, and you're going to say, hey, now I'm building tax-free wealth. Now I'm offsetting all my passive income from other investments. Maybe I'm able to offset some of my active income from some of the losses on that rental real estate. So there's a bunch of cool things that can happen, but you've got to have a clear picture of what you got in front of you. And so starting with that and saying, do I have a plan in place? If not, yes, you should be probably kind of scared about some of the blowback.
The individual that isn't quite sure and they don't have a plan in place, like you're talking about, is going to see the things like depreciation recapture or like capital gains tax as this big scary thing that could happen. And it's always like this at some point I could get this tax, and that's scary. And we know exactly when that tax comes, right? It's when you sell the property. So planning for when you have to sell a property, if you have multiple properties and you need to take depreciation in 1 year while you're selling a property to offset some of the tax burden that's there. If you have a plan set up in advance, you can actually plan for that. If you're flying by the seat of your pants and you have no margin whatsoever, you're running a super tight ship financially and in the process, there's reason to be scared. I mean, you're going to get hit with a tax bill at some point, maybe triggered when you didn't mean to and didn't know that it was going to happen. And maybe you knew it was going to happen and just figured you'd figure it out later. I have no idea. But this is where a lot of people sit. And it really just comes down to the fact that the tax code is huge. It's massive on a level where even the tax planning side is somewhat daunting to a lot of people.
Yeah, a lot of rabbit holes. We sit down with the client and it's like, there are tons of rabbit holes that you can get down. And one of our main goals is saying, how do we simplify how do we simplify our client's life, right? And so it's sitting down with people who know and like real estate. They have experience in the industry in some capacity, and saying, how can we use this, right? There's that famous saying is like, hey, we should invest in things that we know and understand. If you are around real estate in different capacities, whether you are in the trades, whether you're in construction, whether you're working with development, whether you're an agent, doesn't matter, right? if you're in that industry and you're saying, hey, I'm going to invest in something that I know and understand and that I'm around a lot, you are setting yourself up for success. From that, you don't have to have 15 different ways to lower your tax burden. Real estate is powerful enough to just get the job done itself.
It's pretty big.
And so, you might sprinkle in a couple other things, right? If you're a business owner, there's all sorts of little things that you can do to kind of mitigate the tax side on your income tax. But on the real estate side, real estate is powerful. It is the most powerful asset class for building wealth and lowering your taxes. Hands down, we believe that. We're big believers in real estate when it comes to that. Now, there's all sorts of different ways where you can, park your money and then invest it into real estate. You could be passive, you could be active. We're not going to get into all of that. We just want to talk about, why is this idea of deferring your tax bill so powerful? Why is kicking your tax bill down the road so powerful? What does that do for you? What does that look like in the long term? So that brings us to camp number 2, right? Camp number 2 are people who, quite frankly, believe that deferring your tax bill is like the 8th wonder of the world. You talk to the Robert Kiyosaki's of the world, or like his CPA, Tom Wheelwright, right? Like he wrote that book, Tax Free Wealth. You read that book and you can feel it in his veins, right? It's like, no, the IRS code was written to benefit you as a taxpayer, and the government wants you to invest in certain things, right? Small business and real estate are 2 of the most incentivized industries within the IRS code. And when you fall into those things, they're going to give you all sorts of ways to defer that tax bill because they want you investing your money back into those things. And so when you can play this game well, and you can build an actual strategy around your own specific life, and you can take advantage of that, play it out to the end, that's where this camp number 2 sits. They say, okay, I'm going to defer this tax bill. Okay, I'm going to defer this tax bill. Okay, I'm going to defer this tax bill. And then you might die, right?
Yeah. You just keep deferring it because eventually you will die and you won't have paid taxes on it and you don't have to anymore. That's the other end of it. If you defer it long enough, you just won't have to pay the taxes on it.
Exactly.
Not only that, but if you have it set up to be passed to your family, they don't pay the taxes on it that you needed to pay originally. It just resets, the value resets for them, and they could do the same thing, or they could sell that asset as like a bigger inheritance than it would be if you would have sold the house. Let's say it's a single family residence. You sell a house, you pay the deferred taxes, you pay the capital gains, you pay the extra tax that would be involved, and then you give your family this nest egg of a certain amount of money that you were left over with, right? Or you don't, you just hold that property, you continue to defer until you die, you pass that property along to your family, and then they get an inheritance of the amount that it's worth.
Yeah.
That when the day that you die, it resets in value. You get this step up in basis, they call it, and that is what is passed on to your family. And that's huge. That's massive. They don't need to play the real estate game either. They can say, I don't really like that. That was Dad's thing, but I'm not really into it. And they could sell that property and just get a bigger chunk in the end, anyways.
That's a big worry from a lot of people. They're saying like, hey, I'm going to build up this portfolio of real estate. Well, what happens if my kids don't want to like take this over? Or what happens if like, the properties are just like terrible by the time I do die and they're just dilapidated and I've had them forever and it's just going to be more work to keep them than to liquidate them? Well, you're still at least giving them a tax-free, right? Like when they go to sell those properties, step up in basis. Now you get rid of all that recapture. Now you get rid of all the depreciation there. Now you get rid of all of the capital gains when they sell it. So it doesn't matter if they hold them or not. They win, right? Like either strategy is fine. Yeah. And you just set your family up with, a tax-free event right there.
Now there are taxes on inheritance and stuff like that we're not educated on, but that's something to set up for kind of your plan for how you pass assets along to your family as well.
Right. So the real point here is camp 1 is right and camp 2 is right, right? They're both right. If you don't have a plan in place, you're not educated on how this game works, you're just kind of flying by the seat of your pants, your sophistication in terms of your real estate investments is at level 1, that's fine. You should be in camp 1, right? But for the people in camp 2, they're right as well. when they have a plan in place, they're educated on how to play the game. They know what they're doing, when they're doing it, when they need to sell this property, when they buy another one, how they can, sort of play that tax game. They don't have to 1031 exchange a lot of times. They can just kind of like lazy man 1031 exchange, where I'm just going to use the losses from one property. When I accelerate that depreciation, I'm going to offset the gains from when I sell another one, right? There's a lot of like little nuance to little plays that they can do, but they have a plan in place. That's what matters. They have a strategy in place that they're implementing that's true to themselves, and they have a lot of confidence in that.
We're talking about tax efficiency. This is something that you can be more or less efficient at. And at the end of the day, people will owe taxes and people will pay taxes, and some will pay more than others. And it just comes down to whether they played the game or not, really.
Yeah. I like that point, because it really is, when you remove yourself from that, it's just some people are going to pay more and some people are going to pay less. And that is all it is the extra money. What does that extra money do for you? Right. And that's really where you're getting at when we do this for clients, is like, what are you doing there? Right. Are you able to grow? Are you able to set your family up better? Are you able to buy another rental property and kind of expand that rental portfolio to be able to retire a little bit faster? Are you able to like get out of your 9-to-5 job a little bit faster, spend more time with your family? Are you able to make a little bit bigger impact on your community or the people around you? Make those dollars go a little bit further, right? Instead of giving 30 to 40% of it away to Uncle Sam every year, like what can you do with that money to make an impact around you? And so it's not always out of this heart of just like more. How can I lower my tax bill so that I can just do more, right? It's like, no, what does that actually allow me to do as a human being, right? What sort of impact can I make with that? And so, it's the true benefit is, it's an obligation that you can just push off forever, and you're gonna be at a big advantage when you do that consistently. And you can compound your wealth much faster when you do reinvest those tax savings, right? If I can lower my tax bill every single year and I reinvest that, me and Joe Schmo over here making the same amount of money can both be buying rental properties. But if I'm not paying 40% tax bill in my income tax every year, and I'm able to reinvest a little bit more money each time, look at us in 10 years, right? We're not going to be the same at the same point.
And compounding is much different. You're able to put 30-40% more towards investment, and it gives you a real leg up. It's massive.
Yeah. So, we'll wrap this up. We wanted to keep this one a little bit shorter, but if you've been sitting on the fence about real estate, or maybe you own a few properties, but you're not 100% sure what you're doing, right? It feels like you're flying by the seat of your pants. You're like, I just give my information to my tax guy and I hope that he files it correctly. We can help you. We can help you with that. We work with our clients' CPAs. We talk with them. We have conversations. We get them on the same page. We green light everything through them. But then if you feel like you're like, I don't have a great contact for that, then, we have people that we can refer you to as well. And so, I think, the real estate market has changed over the last decade. Yes. Right. And so you talk to investors who have made a lot of money and been successful in the last decade. And, they had a lot of
2% rule.
They had a lot of tailwind, right?
Yeah.
And they put that sail up and they just let the wind take them. And great. That's fantastic. And if you've been able to capitalize in that, I'm super happy. But now we're going to be requiring a little bit more effort, right? To make deals work, to make things work for us, to be able to take advantage of the opportunities in front of us. And so really the last decade has made investors lazy. It's made agents lazy. It's made CPAs lazy, right? We're used to not really milking real estate for the full benefits that it carries and has with it. There's a lot of people who have built portfolios, 10, 15, 20, 100 doors, and they do not know about the tax benefits that are sitting right in front of them. And they're losing 5 to 6 figures every single year because of that.
And it's just faster to flip a property and make a little money and pay the tax and whatever. Be done with it, right? We're getting into a scenario now though with real estate where we have to take a little more effort and spend a little more time planning and preparing for how we're going to deal with the purchase and the sale, and all the inner workings tax wise of all those properties.
Yeah, exactly. There's a lot to it. And I think Matt and I both have a huge heart for Matt loves diving into numbers. I have a huge heart for educating and helping people just become the best versions of themselves. And so when we kind of marry that, when we work with clients, we really get a lot of fulfillment out of helping you guys reach that full potential and help you guys optimize these portfolios and help you guys build wealth through real estate, change your family tree, do all of that. And we get a lot of fulfillment out of that. So anyway, we are real people. We are on LinkedIn, right? We don't have somebody else running our LinkedIn for us. Reach out to us with a DM. We want to hear questions. We want to hear what you guys are up against. You already own a property and you're not sure on something, send it over to us. We got no problem. We'll jump on a Zoom call, jump on a phone call with you, answer some questions, go over some stuff, see if it's beneficial for you to work with us. We'd love to work with you. I think we're super reasonable in terms of, what we charge and what the service that we bring to the table and how much we can optimize your portfolio and really save you on the tax side, by working with your CPA there, but also and just bringing deals to the table and being able to offer a strong, advisor role for you when you're hunting down deals. How do you underwrite it? How do you kind of factor in the total strategy that we've built out for you to really sleep well and feel confident about what you're doing every day. So, and if you're local, reach out to us. If you're local and here in Arizona, let's go grab coffee.
We love coffee.
We literally love coffee.
We'll drink it right now.
As much coffee as you want to drink. We will sit down and drink coffee. So, reach out to us. We'd love to get in connection with you. And thanks for jumping on this live call with us. If you have any questions, type it in the comments below. We'd love to answer it. So anyway, have a great Friday.